No messing about in this one today, boys. We're going to talk through exactly how to pass challenges, no BS guide, how to have a bulletproof strategy, doing everything right. And I promise you, if you listen to this and take my advice, you will not fail a challenge, you will not fail funded accounts, you'll get consistent payouts over the long run and build up your prop firm capital. So let's get straight into it. Let's go to here, very beginning. You have to ask yourself the hard questions. Before jumping into trading in general, you need to understand, first off, do you have a profitable strategy? How to answer that question is, well, let's go over to strategy and let's talk about what is a strategy. Well, a strategy is something that you've cultivated, you've made yourself, that is based on mostly backtesting, previous data. What previous data allows you to do is to work out if your strategy even has an edge to start with. And not to say that the backtesting and the data you collect is the whole edge. There's other areas like getting good on fundamentals, making sure psychology is nailed will help you with that. But the strategy is the foundation that's going to allow you to know, without any emotional errors at all, will you be profitable? I'm not going to tell you in this video how to backtest and how to get the strategy. But once you have backtested, right, this is the easiest way to figure it out. This is for challenges. So first of all, if you haven't backtested, if you haven't got data set of your strategy that you feel confident in, because what the backtesting does is it builds up confidence in what you're doing. And if you're not confident in that, you would have to go no. And I'm going to go straight to, well, get the basics in your life sorted out, find that profitable strategy. Without it, don't even attempt and waste your money. I promise you, you won't be profitable in the long run. If you do have some data, you've backtested, you've acquired 1, 2, I recommend at least 3 years of backtesting back in the past. More than 5 may be a completely different market time and the conditions may be so different, it might not be worthwhile. But I would say focus more recent. The more recent, the better. That's how price has been moving to an extent more recently. This is where you will find the average risk to reward per month. So risk to reward in backtesting. Yeah, you are going to have variables. Some months may be losing, some months may be profitable, but let's take the average because that's all you really can do. So average R per month and then half it. So once you've acquired that, you can then find your biggest drawdown streak in that period at any one given time, add 3 losses to bad psychology. Now your risk can be identified. So what I mean by that is you calculate your risk to reward. So let's say on average, you can make 10R per month. The reason why I say half it is because you may not perform as well as your backtesting. You will likely not perform as well as your backtesting. I certainly don't perform as well as when I've backtested in the past, when you're looking after the fact, when you kind of know what happened in that year. Half it. Be generous and half it. Because what this allows you to do is, even if you can sit there and go, right, I might have 100R a year on my backtesting. Over the 3 years, I have 300R. Well, let me just say I don't perform the best. I catch 50 of it to start with. Because really at the beginning of it, catching any of it is profitable. So you're already in the top 10% just by doing that. If you can get 50R a year, which is on any account size huge, you know maybe you have a 7 trade maximum losing streak and you add 3 losses. So your average R per month is about 5. Your average losing streak is 10. Now you know what your risk can be defined as. This is where I come into the first trader. 2 examples. The first trader makes 10R a month on the backtesting. They can expect to make 5R a month on the live market. They have a 7 trade losing streak with a +3, 10 drawdown possible. Don't risk more than 1% per trade. If you have a 10% overall loss, what this means is, even with making psychological errors, there should be 0 chance you blow your challenge. 0 chance, unless it's a complete fluke. First time in the data has happened. But that's why I say to add extra onto it, because you don't know what the live market will be like. As for trader 2, they may have backtested 20R and then they can expect 10R in the live market per month. Their losing streak overall is a 2, which is very, very good. They may just have a great win rate. They add 3 to that, 5 drawdown possible. Don't risk more than 2% on the challenge. There you go. The reason why, this isn't just for every trader. This is traders that are building up from 0. The reason why it's not the same for a trader like me is I could risk 2.5% on a challenge. Even though I'm more in this area, I could risk 2% because I have the backing, I have the financials from payouts already. And I've gone through this process already. But that is what I would say to be your safest bet when defining if you've got a strategy. So not only now, when you come onto this, you can say you have a profitable strategy, but you also know going into a challenge how much you're able to risk. Then we come on to the initial investment. The strategy being profitable has nothing to do with how much money you can put in. I want to cater for my whole audience here. I know some traders that have a lot of money, maybe working a really good job. Other traders may be in the third world, and for them, even a 25k or 10k challenge is quite a lot of money for them if they're able to get payouts. So it's all relative. I'm going to start off by saying, go with FTMO. FTMO are the best prop firm overall that allow you to have the most capital, that are really fast with payouts. You will pay more, but trust me, don't waste your money on these cheap prop firms. And that's another real hack that may make you get funded quicker because you're not exposed to bad prop firms. And I've lost prop firms, and I know what it's like to lose prop firms. I've been through all of it. FTMO really let the least amount of people down. So yeah, I say go with FTMO. Now, how much can you put into prop firms a month? Obviously, the first challenge that you do, you will not be going with an extra challenge the following month. But this is to stack up over time, so you have a bit of money in a pot for purely funding challenges. Calculate how much income you have after bills that you're happy to lose. This isn't how much money you have after bills. You may have $500, but if you're only willing to lose $100, well, you're going to go from needing potentially to put in 100k into an account to then more into a 10k account or 25k account. If you're in the middle here, which a lot of people are probably in the middle, choose between a 25, 50 or 100. But you've got to realise here, these are the prices that you're looking at. And when we're talking about how much you're putting in, that's why when we come to the actual amounts here, you can see. Let's zoom into these on the FTMO. You can see here that the accounts are not cheap, but they're not cheap for a reason, because they are the best. If you look at this and you say, okay, that's about $200 USD, buy 10k, you're going to be getting way more for your money getting 100k, because otherwise this account, if you times this by 10, you did 10 10ks, you're looking at $2,000 when this is only about $700. Make sure the bigger accounts that you get, not over past 100, so 100 to 200k, they do not get cheaper because they just don't allow that. It's pretty much the same price. But you know that if you're going to go for a challenge and you can afford maybe a 25, don't waste your time going for this, because if you can afford this, it's way more money sensible. Just make sure you're taking enough risk with these prop firms. At the end of the day, you are taking a risk. You can't just expect to just keep doing 10Ks and thinking, oh, it's all right if I fail them. And I'll show you why soon, that failing accounts and getting used to failing accounts is an awful mindset to have. But let's go through this onto the next one. So you've worked out how much can allocate to trading. So you now know exactly how much you can allocate, which is a very good thing, because now at least you know that the reason why I say the happy to lose money is because you're not going to feel scarcity though when you're going into a challenge here and you go into a potential losing streak. You're not going to sit there at the worst case scenario and start being psychological and going, oh, I'm messing this up. Oh, now I want to take loads of trades. I've already told you, you're not meant to fail a challenge. So be confident in that. You've got to have confidence. You've got to believe it. And all I've done in this whole channel so far, in the last year, my prop firm journey, I've literally spoken everything into existence. So no wonder why I'm in this position, because I talk confident to myself. I talk positive to myself. I have 100% conviction in what I do because I put in the work and I do everything I need to do. And it's as simple as that. Once you've done that, you kind of know where you are. So nice. You know how much you're putting in. And that's really the first step. So once you've worked out the strategy, we can go now into the first challenge. The first challenge, based on your risk criteria and the R average per month, this is going to be on an average basis. You may pass quicker, you may pass slower. The first trader with a 5R monthly average with a potential 10R losing streak should take about 2 months to pass phase 1 and 1 month to pass phase 2. Another thing that I'm trying to normalise in the industry is it isn't normal to pass a challenge in 1 or 2 weeks. Going through phase 1 and 2 in 1 to 2 weeks is not normal. Why isn't it normal? Because between them two challenges, you need about 13 to 15% depending on the prop firm. 13 to 15% is higher than hedge funds return a year. So you've got to get brought down to reality and realise if that's what the hedge funds are doing, it's going to take way longer. And yeah, you are dedicating more time and you may think you're better than the market. You're not. You only perform as well as you learn your data, you understand your data, and you apply your data to the live market. The better you get at your data, understanding the live market conditions, the closer you'll be able to bring a 5R month up to a 10R month closer to your backtesting results. But as a generalization, you're looking at 3 months here to get funded. This trader 2 was correct initially. I changed it during the video and then had to realize it was wrong back. So I've changed it back to what it was. It was 2 weeks to pass phase 1 and 1 week to pass phase 2. To be in this position, it's a privileged position. And even still, this is if it goes well. And it's the perfect winners, 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 then loss, then a win. What you can have is you can have loss, loss, loss. And then you're in drawdown. And then you're clawing back from minus 6% in this case with 2% risk to get back to passing phase 1. So it says 2 weeks, 1 week. This could be a 4 week, 2 week, or 4 week, 1 day, or a 3 week, 2 weeks. You just don't know. Just remember, if you're a brand new trader, 2 prop firms, you've got the strategy, you're testing things out, you will not be perfect. And this is an ideal scenario. This isn't potentially what it will do, because I don't think many traders can even perform 10R a month. I've already said that. There's not many traders out there that will be this good with such low drawdown limits and overall losing streaks. But it's something to strive for, right? I've gone here. Right. Somehow, with this and this, if it's not adding up and you fail, you've seriously done something wrong. Because it either is psychological, because you've given yourself 3 extra trades for psychological issues and you've already lost. It can't be down to your strategy. You are the problem. Look at yourself, review all losses. Perfect opportunity to take a step back. You can keep saving your money every month into a trading pot, that's fine. Review all losses and evaluate why your data isn't aligning with the market. That's the only reason, psychology. I mean, you might have just seen a crazy fundamental change up with all the Trump stuff, but even with that, I don't find my experience has been that bad with that. You are a psychological mess. Go back to the very beginning. Get the basics in your life sorted out. So you see how this is kind of becoming a web. You need to go through this. If you trust what I got, and I'll look to put this in the description as a link, you can go through this and you can look for yourself going through this on the Mora board. Am I just a psychological mess? Am I sorting out the basics? Unfortunately, you may do this, and so many traders will go through this period. Believe they have a profitable strategy. Confirm it. Go into the challenge. Below it. Go back. Realise they're a mess. Don't get the basics in their life sorted out. We'll go back through the whole process again and wonder why they get nowhere. Well, it's clearly because you're not sorting out the basics in your life. You're not confirming that you've got a profitable strategy. And even if you do, you're not sticking to that strategy. So you are going to never experience what it's like to pass your first challenge. And that's the sad reality of most prop firm traders. And this is the profit model of prop firms. It's the business model in general. They're just rinsing you guys, absolutely rinsing you. I'm here to change that. I'm here to show you what you're doing wrong, because it isn't normal to fail accounts. I only fail accounts because I have gone on higher risk. I've gone on higher risk because I'm confident in my strategy and I can afford to buy another account if I fail it. I'm happy to take that risk. If you are happy to do that, that's fine. That's why I write here. You can buy multiple 100Ks, even if you're just getting started, if you really want. I don't advocate for it, but there's the option there. You pass your first challenge. Now we're funded. So you pass it. It's taken you 2 months, taken you 3 months. At times, it's taken me 6 months to pass a prop firm account. Now you're funded. So the ball game's different now. What I want to vouch and what I want to confirm is nothing does change. You're trading on a demo account. It's not real money. You're no closer to being rich than you were before. Your mindset is what's going to make you rich. Congratulations, you are better than 90% of prop firm traders, but you have not achieved anything. Do not think that passing a challenge is any kind of success. It's not. I vouch at this point, drop your risk to 0.5%. If not, even lower. Why do I say this? Why drop the risk to 0.5? Because firstly, you get overconfident. You get overconfident from passing challenges. What this overconfidence has leaked into at times for many traders is they go on a winning streak, get funded. What's coming now? A losing streak. The winning streak don't win forever. The losing streak comes, overconfidence comes in, believe that you can take extra moves when you can't. All of the stuff you did here, all of the stuff over here, strategy, goes out the window. And you have to keep everything else in mind here. You have to be just as disciplined, if not more disciplined, on the actual funded account than the challenge. You get that 20 loss buffer coming into that same scenario. For somehow, if you've got a losing streak of over 20 here, you won't be risking even 0.5% and you wouldn't be on the challenge either. There's no way, if you're a stable trader with a 5 to 10 hour drawdown streak in the worst scenarios, in the worst periods of the year, you will have 20 losses in a row. Therefore, again, why I'm saying it's impossible to fail the challenge. It's impossible to blow your funded account. Doesn't matter if you go 7% in drawdown. You've calculated that with a 20 loss buffer, you cannot, even with a few psychological errors, fail your account. It's not about being perfect. I've had so many small psychological issues on the funded, on the challenge as well. But because I accounted for it within my risk, I was still fine. Takes that pressure off. There is no profit target. Remember, there's no profit target. You have the ability to make money now. You can't think that you can just make 5k off a 100k account. You can't make 3,000 off a 25k funded account. Be realistic. Aim for any profit, because any profit is better than anything that you've done so far. You can't forget these basic things. Your ego is taking a massive control over you when you're going into the first payout thinking that you're going to suddenly succeed. Now it's all about refund. That is the key thing. You're looking to get the refund. Trade the account normally until you have hit the minimum withdrawal value. I think on FTMO it's either $20 or $50. Most of the prop firms are about 100, if not 50. So you're going to be all right even on a small account, making 1% or 0.5%. You should be getting that payout. At the point at which you make profit, only for the first payout, stop trading it and wait for a payout date. This is the only time where I vouch for you to stop trading your funded account once you're in profit. The reason why I say this is because you're still down overall on the funded account until you get a withdrawal and then you get your refund. You are not in any better position than when you started the challenge. You have to make sure you're mitigating your risk, and that is the biggest way to do it on your first payout. Stop trading and wait for payout date. And that's it for the road to first payout. If you be really reckless and fail your account, you're in the same position as you were at the very beginning. Get the base in your life sorted out. Reevaluate. Can you trade profitably? Do you have a profitable strategy? It's the simple thing. This is the clear way to understand if you're doing something wrong. You don't need all these videos of other traders trying to tell you what is right and what is wrong. You've got to work out what is right or wrong for yourself. And that's why I can't speak for you. You have to work this out yourself. Road to first payout is completed. You're now onto the scaling stage. Really the last stage of prop firms. It's that simple. We've gone through the process. Once you've done the first payout, you get something. And what that is proof of concept. You've proven that you've gone through the full process of challenge, buy the challenge, phase 1, phase 2, funded, payout, refund. Now you've done it. You've managed to acquire your payout and your refund. If you can do it once, that's the confidence I had. You can do it again. Do it once, you can do it again. Doesn't matter whether it takes you 2 more months, 3 more months to get your next payout. You've proven that with the way that you've traded, the fact that you've taken your time, you may have taken 3 months to pass your prop firm challenge and you finally got the payout. All that discipline and all the times that you doubted it was going too slow, it all becomes worth it. At that point, you'll receive a payout and a refund. This is where you will not become a 7-figure funded trader if you're still working and you make mistakes when you get payouts. I always vouch on the first payout that you get, use your refund to purchase another challenge, maybe a bigger one. You've got a pot of money you've been putting aside. If you've got more money in that, you can go for 2 challenges. This is what I did. I went for another 100k FTMO. I went for 100k fivers, and I started to take alpha accounts as well. At one point, I was taking 400k. After getting 100k's funding, I was taking 400k's worth of challenges at once. This is the way I did it, and this is the way I felt confident in, because I had built up a money pot, being able to put money into challenges, and I put everything on the line because I knew that this period of my life, especially if you guys are watching that at 18 to 25, 18 to 30, this period of your life, you'll never get back. You have to take risks. As for the overall payout, treat yourself on the first payout, because it may only be a few $100s. Go and take your family or friends out for a meal, pay for it. See how you feel, because it's an amazing feeling. Withdraw your money from an ATM. Get it in your hands, feel it. This money is real. And only when you do that, you will realise, okay, I might have $200 here. This is real money. I'm going to go and buy something. You're buying something that has taken you discipline and hard work to achieve. This money will feel like no other money that you have earned from a job. It will feel completely different, and it is different. In my opinion, it is different because you made that money yourself. No one paid you to do work for them. And that's the difference. You're now trading a funded and a challenge. The next step, every time you go through this cycle, you're going to encounter a new problem, a new step. This is the final one. You're going to be trading funded accounts and challenges at the same time. Why I say this, not that it should matter for the way that I've written this board up, is because a lot of traders feel like they shrug it off. Just lost a challenge. Oh, well, doesn't really matter. I can buy another one. I've got another $50 to buy one. What you've got to realise is when you've got a funded account and you want to be in this position, you want to be funded, you want to be buying challenges, you're going to have to do these at the same time. So all of a sudden now, you just can't blow a challenge and shrug it off because you might blow your funded at the same time. Now the game is changing. Now you're in that position. You want to be a trader. You want to be a prop firm trader. Now you're funded. Wait a second. I've got 50k worth of funding here, but I'm not really making much on the payouts. Yeah, because you need to scale. You can't make a living off 50k. You're at 5,000 purchasing power. You're not at 50,000 purchasing power because of the 10% drawdown. Get used to taking challenges, getting funded at the same time. Repeat the steps we have covered, and you will be multi-six-figure funded across a variety of prop firms. Simple as that. This is exactly what I've done, and I'll speak about what I've done. A lot of people know I went from purchasing accounts, challenges in May last year. From that point, I've gone from 0 to 600k in funding. I haven't blew any of my funding, and I've only failed one prop firm challenge from the max daily loss of 10% based on me calculating how much I can lose. There you go. So no wonder why I'm in this position. There's probably traders that have way more funding than me, but this is my way of doing it. This is the way I like to do it. If you were to ask me now, do I like going onto a prop firm challenge and risking 3%, 4%? No, I don't. I don't like failing the account in 2 trades. I'm still not wanting to do that. Why? Because firstly, it puts pressure on the prop firm. They look at me and they go, why is he high risking so much? They've actually looked onto that, and that's why they do the consistency score. That's been added into loads of prop firms. But just secondly, I'm more than happy continuing to take the strategy that I've used to get funded, to continue to get funded, because it works. And that's it. It's as simple as that. And you will see, if you follow these steps right, you will be funded by the end of 2025. If you don't follow these steps and you don't get your ego in check, you're going to keep falling into the habits of being a psychological mess and not realizing that until you get the basics in your life sorted out, you won't be a profitable full-time trader. Simple as that. And that's really it. Really, the last thing I can say on scaling is once you're happy with the prop firm funding that you've got, you're not buying payouts with we're not buying challenges with your overall payouts anymore. Look to fund your live account. And once you start funding your live account, you're building up that safety net for you. You're not going to be relying on prop firms. They're nice to have. They shouldn't be the be all end all. And they're a nice little side income, really. And that's all that matters. So I really do hope you guys took something from that. If you want to see more videos like this, drop a like, drop a comment on what you want to see. And I'll see you guys in the next one. Take care. Peace out. See you later.